Can you explain IUL for long-term care? How does that work?
Welcome to Barry's Bites. Please join our host, attorney and financial advisor Chris Barry.
When we're setting up a IUL policy, and again, I don't like to get too much into specific tools because I don't want it to come off as like I'm trying to sell you on something. But that said, this is a complicated tool. So when we're talking about IUL, kind of think of it as a pie, okay? And depending on how we structure it, can provide different benefits depending on what your goals are. But typically when we're looking at this pie, it can be split up into different things. So one would be income, so tax-free income, okay? So if you want tax-free income in retirement, we can structure the IUL so it can provide tax-free income. Also, it could be set up as a legacy play, right? If you look at your investments and everything you've accumulated and say, hey, you know what? There's going to be some portion that I'm not just going to need during my retirement, and I want to leave more money to my kids or grandkids, then just kind of thinking big picture, every dollar you put into this could be $2 of tax-free death benefit to the kids or beneficiaries, right? Where we get the leverage of life insurance, right? So yeah, we could do Roth conversions, and now you have a $100,000 Roth going to the kids, which are tax-free, but depending on your age and health, and again, this isn't just for young kids, I have clients who are 65, 70 and older doing this. If we can leave instead of $100,000 or $1 million to the kids inside of a Roth, but instead now it could be $2 million tax-free, that could also be estate tax-free, we're creating some leverage there. So it could be a legacy plan, or we could also add in long-term care benefits. And so typically what happens is that long-term care benefit or death benefit could double as a long-term care benefit. So if, let's say, we have $1 million worth of death benefit, depending on how we structure this policy, that $1 million could go to the death benefit or the long-term care benefit. Where if, let's say, we needed $500,000 of long-term care benefits during our life, that means of this $1 million pie, now there's going to be a death benefit going to the kids of whatever's left over to that. So it's a way that we can leverage for not only long-term care, but also death. And so what we do when we're utilizing an IUL, if that's going to fit into the strategy, is we prioritize, okay, what's most important? Is the most important thing tax-free income? Okay, then we're going to structure the policy different, and maybe we don't add on that long-term care benefit, and it's more geared towards having this like tax-free income benefit. Or I was sitting with some clients yesterday, they were fine in terms of income, so really we structured their entire policy more for a death benefit so that we're maximizing the death benefit. Right? So there's different ways we can structure it based on what your goals are. So that's a short explanation of IUL.